Hi everyone, my name is Po Qiying, the group leader of Group 8. Our group members include Jolene Li Pei-Xuan, Liu Ke-li, Lao En-Ci, Boyi Chen Jiayu, and Annie Yi Zini. Today we are going to present Management Accounting Assignment 2. Now we are going to start our presentation.
Question 1A. What are the objectives of this study related to management accounting? The objectives of this study related to management accounting are to identify and highlight the management accounting procedures used in these four nations: Singapore, Malaysia, China, and India. These results will help us in showing whether we are teaching students what practitioners need. We can determine if there is a discrepancy between the management accounting theory we teach in the classroom and actual practice. The second objective of this study is to compare the management accounting methods employed in four nations. This will help provide an overview of management accounting procedures in the four nations to increase the body of knowledge on management accounting practice in Asia. Last but not least, the finding of this study will help determine whether or not national cultures has a significant role in understanding management accounting procedure in the fourth nation. This because it is frequently said that accounting is a result of its environment. If accounting is a result of its environment, there will be difference in the adoption of various management tools by companies in this country.
Budget aid planning facilitates interdepartmental communication and coordination. It provides a means for companies to allocate scarce resources more efficiently. It's used as a tool to evaluate the divisional or managerial performance. In India, budgets are commonly used for planning day-to-day operations, cash flow and financial position, and controlling costs. Firms' budgeting philosophy and involvement of various levels of managers of firms. In China, only 4% of 81 accountants perceive operational budget to be useful. There is also less attention given to capital budgeting in China amongst Chinese partner firms and SOEs. In Singapore, about 95% of 174 companies use budget as a financial control tool. 106 companies use budget to evaluate performance. 83 companies prepare the cash budget. Cash budget is prevalent amongst companies in the retail, manufacturing, and the hotel sector. In Malaysia, 98% of the 61 companies in the industrial and consumer product sector of the Kuala Lumpur Stock Exchange KLSE main board use budgets. Standard costing regarded as a tool that enhances planning and control. It improves performance evaluation. Standard costing also aids in product costing. In India, 68% of 60 firms surveyed still use standard costing. In China, about 94% of the Chinese partner firms and 92% of SOEs use standard costing for joint product costing. In Singapore, 47% of the Singapore companies surveyed still use standard costing. In Malaysia, most of the companies use that standard costing to compute product costs as an aid to budgeting and for cost control and performance evaluation. 214 manufacturing companies reported that 69% of the companies use standard costing. CVP analysis is one of the most powerful tools that help managers in planning and decision making. It helps managers understanding the interrelationship between the quality sold, cost, selling price, and profit. In India, 65% adoption rate amongst medium and large companies in their survey. In China, CVP was of special interest to both academics and practitioners. practitioners because of its ability to link target profit with operational planning. 81 accountants of the practical value of CVP found that 79% of the respondents perceived CVP to be useful. In Singapore, 72 companies in the Singapore surveys use CVP. In Malaysia, 53% of 240 manufacturing companies in their survey have used the CVP technique.
Question 1C. Explain the extent to which traditional management accounting planning and control tools such as ABC, target costing, and the balance scorecard BSC are used by companies operating in India, China, Singapore, and Malaysia. Activity-based costing (ABC) is a cost-benefit analysis utilized by practitioners to accurately allocate overheads. The data show the percentage using activity-based costing. In India, only 20% of the 60 companies surveyed say they had adopt ABC. China percentage is even lower. For Chinese partners firms and SOEs, the percentage was 2 and 1%. In Singapore, 13 of the 106 companies surveyed use ABC, with 14 out of 106 claiming to use it. In Malaysia, a study found only 4% using ABC and another indicating 28% adoption. Target costing is considered to give business a competitive edge. The data show percentage using target costing is in India, only 35% of firms have adopted target costing, and in China is not included in the statistics. Singapore is also not examined in surveys. 41% of 214 Malaysian companies have implemented target costing, with another 4% planning to do so within the next 5 years. The BSC introduced due to concerns that relying solely on accounting metrics for performance evaluation may not be sufficient. The data show the percentage using balanced scorecard BSC. In India, 40% of the survey companies utilize in the BSC. Surveys in Singapore and China did not examine the BSC. 61% Malaysian companies and found minimal use of the BSC.
Question 1D. Why traditional management accounting tools are still being used by a large majority of fields in Asia? Traditional management accounting tools are still being used by a large number of fields in Asia because of conservative and risk-averse. This is due to the fact that Indian managers are typically more conservative, less risk-taking, and less creative. India are therefore adopting new management accounting techniques more slowly than other people. Furthermore, lack of awareness and apprentice of new techniques, it is possible that some business in developing nations lack knowledge of new management accounting approach or the skill necessarily to effective use there. As a result, People can prefer try and true traditional approach since they are more comfortable and convenient. Last but not least, the high cost of implementation and the fact that there simply was no reason to change from the traditional technique to the new tool. Many businesses in India and other Asian nations believe that using modern management accounting solution is quite expensive. This perception of high cost can act as a deterrent to adopting this new technique.
Question 2 is summarized from Article 5. The advantage of traditional asset pricing models (DAMs) and cost asset pricing models (CMAPs) are investigated in this study for foreign oil firms operating in Libya. Given that management accounting is frequently ignored in the literature, the study intends to advance understanding in this area.
Due to their intricate operation, service, retail, and manufacturing enterprise require management accounting (MAPs). Little procedures, process, or rules of MAPs are employed in a particular industry, particularly in manufacturing. Budgeting, standard costing, variance analysis, and performance measurements are all covered by MAPs, which are broken down into conventional and modern practice. IFSC considered MA before 1950 as a technical activity necessary for pursuing organizational objectives. A management activity but in a staff role in 1965, management and production techniques in 1985, focusing on the effective use of the resources in 1995, Libya's main oil business, the Main Oil Corporation (NOC) produces 70% of the nation's oil. It has the most proven oil resource in Africa and is a member of OPEC. Oil resources are under the jurisdiction of the Libyan government, which also accounts for over 50% of GDP, 75% of government revenue, and 95% of export revenue.
Um, 2009, fully owned oil companies like Saudi Arabian Gulf, Ras Lamu, Zabia, Brega, National Oil Wells, Jove, and National Oil Fields and Terminal Catering Companies, as well as joint ventures like Jutina, Melita, Walha, Mabruk, Harroch, Akakus, and Nafasha share similar budgeting, planning, and performance evaluation practice. The evaluation stage and management Indian oil businesses are investigated in this paper. The oil corporation received 224 surveys with 93.7% of them being valid. The IFIC-based model was used to construct the 24 MAP elements. The use and advantages of MAP was asked for from the respondents. The response rate met expectation due to their intricate operation, service, retail, and manufacturing enterprises require management accounting.
The impact of the Scurvy approach on management accounting practice is one of the research weaknesses. For more complete information, future research should employ interviews, cross-country comparisons, and an analysis of the effects of MAPs of businesses. Thanks for our presentation. Thank you.